Brian Comeault. Welcome to the show, buddy.
Thanks, man. It's good to see you.
So this isn't new to you. You're on camera every day, talking about markets. How are you adjusting to all this? How are you adjusting to your YouTube presence out there, your exposure? How's it going?
Yeah, we've been putting out videos on YouTube just to try to, keep relevant and see if we can expand our audience. And as much as I hate hearing my own voice, it kind of is one of those necessary things. So yeah, we have a good time.
So you don't re-listen to your episodes very often, then you just kind of put it out in the world and get ready for the next one.
Yeah, if I make any mistakes, the listeners let me know, because I don't listen to them before they go out. Yeah, it's pretty funny.
Yeah, I get a few of those as well. They're like, "You said this? That's completely wrong." I'm like, "Oh, okay. I'm sorry. I'll try to say it properly next time." But I'm not the smartest guy. I'm just here. So, anyways, well, I really appreciate you coming on the show. My goal here in 2026 is to get more professionals here from Western Canada, more analysts, more industry folks on the show. And of course, you're going to join us in Brandon, Manitoba for the conference later this year, which I appreciate. But it's not like you just started this. You've been doing this for a while. Why don't you give me and the listeners a little background, and then also just talk about your projects today? What do you guys got going on today?
Yeah, sounds good. So we started a market consulting business called ICL Agriculture Markets. We have three partners. It was born kind of out of the ashes of some Cargill restructuring that happened about a year ago or so. And, we all had our strengths, and we wanted to capitalize on that. And so we do, market consulting one-on-one with clients. We do some content creation, as we were talking about on the videos, as well as reports and things like that we send out to those who want to subscribe to them. And, we do some speaking engagements, which you mentioned, and just some other things like that, educational opportunities and things like that. So, I do have some gray hair. I've been in this business for a while, and I think this will be my swan song here. So, we're excited, and it's a good time to be in this business.
So you and I, do you remember we were together at Viterra? We were down at, didn't we do training together in Saskatoon or Regina or something back in the day? Wasn't that Viterra? Like way back?
Maybe Viterra. I definitely know we were at Cargill together.
And then, we were at Cargill.
Yeah, I followed you after FBN. We just keep. It's a small
space, and crop marketing is a very small space. But There we go. Yeah. I'll have to do some thinking, but I'm positive there was I want to say like a Viterra training session in like 2009 or something. I'm going to do some thinking, Brian. I'll get back to you.
That makes sense.
All right. So you're working with, you've got advisors across, spread out across the prairies, or how does this kind of work?
We mainly deal with a core group of clients in Alberta, particularly Eastern Alberta in the, along the Yellowhead corridor there. And that's what started our business. Is we had a lot of people that were looking for a full scale marketing opportunity or full scale marketing advice and things like that. So that's our main bread and butter. We do have some other advisors that we work with. They don't work with us, but we support them. We help them to grow their own business in this space. So that's it's, again, we're very new. We're about 10 months into this. So we had lots of interest and lots of great conversations, and this being one of them.
Awesome. All right. Well, I appreciate you being here on the show and sharing some insight with us. I want to talk about 2026. I want to set the table here for 2026. To your core, Brian, how are you feeling about this year? Are you feeling a bit of optimism? Are you feeling some negativity? Like when it comes to the prices of the stuff we're growing in Western Canada, how are you feeling as we head into 2026?
I feel pretty good. Although, you could say that I'm an eternal optimist, or at least that I see the silver lining in a lot of things. Last year was challenging because, we I can't believe it hasn't even been a year yet since Trump took office in the U.S. That has created a lot of ripple effects in agriculture markets that have even had some other spillover things. We had huge yields, which is, it feels good going into the bin, which I think is the silver lining, but that has come along with, lower prices and things like that. But I think the yield offset some of the reduction in price. So, overall, that makes me feel good. I think that even if we return to averages or the mean yields, I think that we should celebrate that. And I think there are some opportunities for prices out there to get some opportunities. Yeah.
So, is there any storyline that you're paying, very close attention to here? As we're early part of January 2026. Is there something that you're like, this is my hot button topic? I'm keeping an eye on this thing for the next number of months here. This is very important that we should pay attention to.
Yeah, I think there's a couple of things. I call it the Trump effect.
Mm-hmm.
There's been lots of chaos. A lot of it has simmered down. So I do expect that, crazy tweets or truth socials or whatever they're called the market might not trade them with as much vigor as they have in the past. Mm-hmm. There's obviously the opportunity for a brokerage of a deal between Ukraine and Russia. And I think that, could be something to watch as far as potential support to prices in wheat and even some other grains. My bias is that will be a very difficult thing to have happen, but I think it's something that we should watch for, because I think the market might react to even small rumors of such happening.
Mm-hmm.
Right now, even for the next quarter, definitely looking at South America and what their effect on the market's going to be. Just the size of the crop, how much they sell to China, all of those kind of things. So I think, right now, South America is very important, and I think it will continue to be for, into the next quarter, March, April, things like that.
Yeah, I think from a weather perspective, Argentina has faced some challenges, even though I believe they had a dandy of a wheat crop, and then Brazil, again, you're talking about an entire country, but it looks pretty good over there so far, doesn't it? As of early January.
Yeah, very, very good. Some of the very early soybeans are starting to be harvested now. Mm-hmm. I mean, the USDA is calling for 175 million tons of production out of Brazil, and there isn't really a lot of concern areas. Again, that's up from like 171.5 last year. Yeah. And that's a big increase. Even from an acreage standpoint, every year acres in Brazil seem to keep going higher. Actually, that's not even hyperbole. Like this year, acres grew by 3% this year from last year, and then 2% the year before. It's just been this constant growth. And some will feel that there's some damage being done to, say, rainforest land and other things. But from a market perspective, that's one of the reasons why Brazil continues to grow their production, is because of how many acres they are continuing to add.
Yep. Yeah, fair enough. Yeah, for sure. Rest of the world kind of losing acres to urban sprawl or whatever you want to call it, and yet South America, Brazil adding acres to the pie. So as you look at your crop marketing plan here for 2026, to those listening or tuning in, do you have a go-to strategy or something that's kind of come to light the last couple of days that you'd highlight here for us, or anything standing out?
I think what's standing out right now is kind of the market structure and how much carry there is in the market. Like I was saying, there's always silver linings and things. And so the prices being low and the market tilting bearish, that means that there's carry in the market that can be taken advantage of. If acute delivery isn't part of the necessary marketing strategy. The carries were really big as we got into the beginning of December, almost full carry on some of those markets like canola. Now there's still really good carry in the canola market. The wheat market is more steady, but that gives you a lot of opportunity to sell deferred and use reentry strategies to get back in on the front month. And that's a lot of our conversations are around that right now, which is just taking advantage of what's there, the bird in the hand.
Yeah, and the interesting thing too is that you can go grab that carry in the market. Maybe you get a little pop, a spike. The market climbs. You grab something down the line, and then all of a sudden you're seeing the strong demand for Canadian wheat or these really wonky canola bases to fill cars. Like you might get lucky and attach those two together and pull off a dandy of a price at the end of the day. So yeah.
I think wheat is getting to that point where we've seen that the bin doors stay closed under a certain level and buyers have to bid up using basis or premiums or whatever in order to get it moving. And the exports of wheat are just phenomenal out of Canada. And I think that's, a large reason for that, unfortunately, is the decline in Canadian canola exports. So wheat has to make up, a big part of that. And so I think, there are opportunities for marketing wheat when the prices, little pop in futures and a little premium all of a sudden gets to people's target levels. And as we were saying with the yields, it starts making profitable sense. So, target prices are very important right now too.
Yeah. So like, what do you call this, Brian? Like, what do you call this environment of these grain facilities, the buyers out there? Like this is going on the second year now where you just wait for that price, that special or a better price to arrive to fill these darn cars that are coming next week. Like what do you call this? Or do you, maybe it's not even what is it called, but is this what selling grain is going to be like for the next number of years? Like just throw it in the bin, wait for the company to be short for these cars and pull the trigger? Like, it's strange.
You know what? I kind of hope so in some ways. The futures are driven largely by more, global fundamentals. We don't have a lot of control over the futures for most commodities. Canola, of course, we do have a little bit more pull, but there's, a lot more pull from canola is coming from biofuel sector or even palm oil or soybean oil, things like that. So, the Canadian fundamentals, yes, play a large role, but not the only role. And I think that a lot of what's happened recently, and, we've had very good years over the last 4 or 5 years as far as, farm marketing, good profitability and things like that. And I think that has allowed farmers to A, get a little bit more comfortable with their cash positions, and B, I think they've invested in storage and bins. And both of those things kind of combined allow for a lot more flexibility in marketing. And so, you don't necessarily have to be beholden to the elevator company when you want to sell. You can kind of play it a little bit and work with what works best for you. And I think that's been a really positive thing for farmers in the last few years.
To me, it's like you think about the crop we grew in 2013 and that it's different, but the marketing environment we had that winter, like it was horrible to try to move grain that winter. It was like a historically terrible event to now in 2025, 2026, growing the biggest crop we've ever grown, locking it in the bin and saying, all right, call me when you need it. Like, it's incredible, the change over a decade. So,
and even even the market, the use for some of their commodities, like I'll go back to canola, our capacity to crush canola now is over 14 million tons. By the end of this crop year, it should be 15. It should be 15 million with the Regina crush plant opening. We're not beholden anymore to the same export programs on our canola. We have a lot of domestic demand. And as long as the EPA doesn't screw us over, we probably have a customer south of the border there that will continue to use canola oil for biodiesel. And that opens up the market. I know a lot of trading trading firms have been opening up the South American market for our wheat, which traditionally went largely to Asia. So that's changing as well. And all of those things kind of add up over time. So yeah, the biggest crop we ever had is not as big a deal as it was back in 2013.
Yeah, it's nice to see a little bit of a different swagger than back then. So good stuff. All right, Brian, anything else on your radar here for 2026 that we need to pay attention to? Do you feel like we may end the year, slightly higher on prices than where we're at today? Do you think we'll be fairly neutral, or do you think there's risk for more downside?
I think most of the downside is likely baked in. The large wheat production globally, the Australia is the last to harvest for this crop year. It's coming off. It's known that that's big. So I think now the big question marks will come, in wheat on the North American growing season. Global wheat carryouts have actually been dropping for a while. So I think that, there is some opportunity. There is some opportunity in wheat. I think that we can see canola the same. I think the big elephant in the room there is the Chinese purchases and the trade row that we're having with China right now. As I was saying, I don't have a lot of hope, and maybe that's because of there's a lack of. It's kind of like a push-pull, right? The Canadian government has to figure out if they want to continue to keep farmers upset because of the policy with China, or if they want to keep the auto industry upset. So, it's a big balancing act for them for sure. I think that the expansion in crush will be important as well. Margins for crush right now are really, really good. So there's really not a disincentive to crush that canola.
Yeah, I wonder if somehow, some way, there's a happy medium, not a happy medium, but something in between that satisfies, China a little bit, taking some of the pressure off. I don't know what that would look like, but I guess we'll see. Chuck Penner mentioned, the canola market being kind of like an on-off switch, where if there were some positive changes, the light turns on and the market's going to have a great run if they remove these tariffs. But if they don't, it's just brutal and not very fun. And there's no in between really right now. It's either it's going to be really good or continue to be bad. So anyways, I'll digress.
What do you think about canola acres? Like, do you think that there's enough disincentive because of the problems in marketing that there will be a reduction in acres this year?
I would view acres as a slight increase at this time, and in some of the conversations that I've been a part of. Not a scary number or anything like that. In Mother Nature will potentially change this as it can, but from a numbers perspective, I see a lot of folks penciling in canola and it penciling a little higher than a lot of the other crops. So that acre hanging in, which is, again, with all the problems we have, still penciling as one of the best is interesting. And, I chatted, this is just one example, but, chatted with a few farms that in an area where they traditionally don't grow as much canola, and some of those farms penciling in some of their highest acres, in one case in their history, and in another case, the highest acres in a number of years. So that's very small. We're talking about a couple of people here. Let's not get crazy, but it's interesting when those types of comments are out there.
Yeah. And I mean, the yields were amazing. Even if you get small pops in pricing and you get similar yields, and maybe that's just a recency bias, but there would be a very good return on investment there.
And the other thing too, I view this a little skewed because I don't want to talk my book here a whole bunch, but NOV of 26 canola futures traded at 700 or better, did they not, Brian? And
yep.
We sold some of that, right? So 50, 60, 70 bucks a ton higher than where we're at today. That's a big difference. So again, I don't know how, hopefully a bunch of people did that and bought some confidence in growing that canola acre for this year. But yeah, so we are working with a bit of a better margin than what's currently out there today. So anyway,
oddly enough, there's a carry right now still to the NOV, or from the July to the NOV. So there still is some opportunity there for hedging new crop, particularly if you have the ability to get to have upside exposure if the market decides to take a run.
Yeah, you bet. All right, Brian, how can people get a hold of you guys? What's the best spot to check out your content?
Our website is canadianagmarkets.com. So that's nice, simple.
Nice and easy. Yeah.
Nice and easy. And the YouTube channel is youtube.com. What is it? / Canadian Ag Markets, I think is how you get there, or you might be able to search it there. That's that's probably the best ways.
Yeah, if they toss your name in the search bar on YouTube, I'm sure it'll find you. It's good at that. So
right on.
All right, folks, go check out Brian's content. That's Brian Comeault. Go check him out on YouTube. Thanks for being on the show this week, Brian. Look forward to having you as a guest for the year, and hey, we'll cap it all off in Brandon, Manitoba in December. So yeah, thanks for that too.
Sounds good. Thanks, Ryan.
Take care.